Wednesday, October 11th, market analysis, Stan Ehrlich. Good morning. I'm doing this a little early because of prior obligations. It's 9:20 California time. And I always start out with the stock market indexes, as you guys know. Here is the S&P 500 spider. We did get on Friday what I consider to be, at this point, the October lows that I was totally expecting in October. Told you about it months in advance and was hoping to get a bullish ER green buy signal, which we did. So we rallied further on Monday and yesterday, Tuesday, and at the moment we are down on the day about 3/4 of a point, a relatively very small amount. The momentary support and resistance levels that we're dealing with is important because it's the old neckline on a previous head and shoulder top that was working great until last Friday, which, by the way, one of my listeners and viewers brought to my attention that the 200-day Dow Jones Dow Theorist moving average was tested during last week on Tuesday, Wednesday, Thursday, and Friday, bouncing essentially very, very close to that moving average, which I normally don't like moving averages. They're always late by design, but they can be used as a crutch in terms of claiming that the trend is now finally up or down longer term and so on. So it's interesting that I bounced off that. I did not realize that. Thank you for pointing that out. Whoever it was, I don't remember. I'm sorry. But hey, it happened. My signal is what I love, and that's the green bullish engulfing, especially since it was in October. So I am obviously not bearish anymore and looking for a series of rallies into new highs above the July 27th top, which I got a sell signal on the exact high day. And for those of you who do not realize it, we also got a buy signal October 13th on the bottom of the bear market to the exact day. That's the ER signals, automated trading method or signals, and for therefore trading method. And it produces the ER1 and the ER3 actual automated entries and exits. You can see one of our ER1 long position entry trigger right here. We bought it almost exactly at the low on Monday. Now, I'm sorry, we bought it on Friday. It's an ER1 signal, and it gets in the day it turns green or turns red. So what are we going to have here? So far, it's a doji. Inside trading range, doesn't mean too much. Momentarily, a little bit lower on the day, not much. Along with the DIA down almost exactly the same 75 cents, no big deal. And the Qs at the moment are up about 60 cents. A little bit of a mixed bag. The important thing, again, I want to remind you, is the old neckline is still a support and resistance line. So at the moment, we're a little bit below it. Yesterday, we closed pretty much on it. And we've been trading above that line some of yesterday and some of this morning, most of this morning, which pretty much kills the line in terms of its validity. So in a day or two, I'll probably just erase it, especially if we get substantially higher, which I think, not lower, I hope, above the line I'm expecting. So I wouldn't be surprised if this turned around and closed on a strong note today. But please remember that from the low of the day on Friday at around 420.50, yesterday's high, which was 37 and change, was a approximate 17-point rally in 2 days. Friday early to Tuesday's high. That's quite a bit of a rally, a little over 5 points per day on the average. Excuse me. And it's time for it to, dribble around a little bit and rest for a moment, which it looks like it's doing, to be honest with you. So even if it did come down a little bit below yesterday's low, I don't get any reversals. I don't have a problem with that. We're not very overbought, not even that close. And this is the time period when it could fiddle around a little bit and not mean too much. Okay, next chart. We're going to go to the NASDAQ, and I didn't yet remove all of these little markers for the head and shoulder pattern. So I'm doing that real quick right now. And I'll simply leave the neckline intact, which we never broke below. We never had a breakout. This now looks, and I'll erase that also. This now looks like an Elliott 1, 2, 3, or just a normal correction in a bull market. I don't have any problem with the way this is acting. I wished I had bullish engulfing buy signal on Friday, but it wasn't oversold, so I didn't get it. But I'm bullish, and within a month, maybe new contract highs. QQQ, same story. I'll erase those lines now for the head and shoulder formations, and there were two of them. One of them worked great. It only took 3 weeks to form and a few days to work, and that was a small one I'm erasing right now. So bye-bye pattern and the appropriate lines to show you what I was looking at. Okay, that's a gap closure, and that occurred on Friday's rally on the QQQ. And we kept on going Monday, Tuesday, and today. We're still a little bit higher at the moment, and we did make a minor new high. This is just working just fine. I've got no problem with this rally that began on Friday, which I think is going to continue to perpetuate. The DIA daily data chart has got a green bullish engulfing smack dab at the bottom. It's great. And we got sell signals at the top of the market, not the highest high in this case, but this pattern, of course, should be deleted. I'm going to remove the markers later. The important thing is October lows are in. I think the market's going to continue to trend higher. Next chart is the Russell 2000, bullish engulfing on Friday, green, look great. Love it when it does that, especially when I'm expecting it at a certain time frame, October in this case, and it's just doing great. And I'm going to erase all the other references to the bearish expectations until Friday were working just great. And of course, they got ruined by the bullish engulfing and seasonal tendency starting to move it up. Next chart is the Qs, and that's just the 1 minute. I'll pass on the 1 minute charts here. Let's go back to the spider for a second. Since the opening here, we came off to around unchanged, popped back up a little bit, not that much. Remember, the scaling is very important. This is only like a 2-3 point high to low scale here, not that large. So it may look like a big move, but it's not. And we're bouncing off of a minor low in the last few minutes. And the DIA is doing the same thing. And the E-mini, of course, is doing the same thing. So let's go to my next chart, which is the MES. We got and that's the micro E-mini. We got a bullish engulfing, of course, buy signal at the bottom Friday, and 3 of them at the top, one of which was the highest high, which of course is the best one. And a complementary that worked pretty darn well just 2 days later, and boom, down we went. So I've erased all the lines here, except for the neckline, and we are trading and closing yesterday above the neckline, which of course is a no-no if you think the pattern is supposed to work correctly. So it's just plain old every day getting ruined, or it is ruined. Here we have a profitable trade that we just got stopped out of just a few minutes ago on the MES micro E-mini and bought it. Let's check this out. Maybe I can squish this so you can see it. No, I can't do that on a 1 minute chart, but I can drag it so you'll see that we got in on Friday, Sunday actually, sorry, afternoon, and worked out great. ER3 entry because of the signal that we had, the green price bars on Friday's reversal, this way down here, and then a very big rally. Remember, this is 1 minute data. So that trade worked out great, and we just got out of it. Let me rescale, and there we go, just a couple minutes ago. Next chart, MES, daily, I just showed it to you. Okay, futures, futures, futures. Now, E-mini, staying above the neckline. That's not what's supposed to happen if the pattern is legitimate. And of course, it is now gone, ruined. So I shouldn't have these reference lines in. And I'm just simply going to erase, except for the neckline, everything that outlines it. Good. Up we go, in my opinion. Next, NASDAQ futures. I never did put the lines in except for the neckline, and we never broke out in the first place. Bonds rallying very nicely off of the very, very oversold condition. And I went into some detail yesterday. This is the most oversold condition that we have been in a few days ago for at least a year, maybe a lot longer than that. Severe oversold. Almost every time you get down around 10 or lower, you're going to turn around. I'll repeat that. On my custom RSI, every time you get down to approximately 10 on daily data on any symbol, you are almost guaranteed, almost, that you're going to turn around very, very soon. Next chart, 10-year notes, same story, rallying pretty nicely. And how far is the bonds going to go up? The bonds are going to go up, I think, to 117.25-ish. And the 10-year notes, I think, are going to go up to at least probably 109.12 and maybe up to 110.21. Next chart is crude. It came down and closed the gap almost exactly, ladies and gentlemen. I talked about it for the last couple of days after gapping up on Monday. And I mentioned that that would be a perfect spot or a very good spot to be buying, and you would have bought almost the low of the day so far. Off to a good start with a scalp, that's for sure. And off to maybe a damn good start with a position trade. Next chart. Heating oil. Bearish engulfing, but not red because we're nowhere near overbought. But that implies that it's going to go down some more. We're in an area of support, and we were oversold. I'm not agreeing with this. I think it's going to go sideways to higher, frankly. But I have to mention bearish engulfings usually mean it's going to go down. Next chart. We have a brand new natural gas sell signal. Outside down day in overbought conditions, turning the bar red. We're going to go down. I think this is a top that is equivalent to this one, and this one. All three previous tops were overbought. They didn't have a sell signal quite as close to the high as we do today, but that doesn't matter. Tierra del Fuego is going to head south, in my opinion. Today, we have a major follow through to the upside in gold, which is great. Buy signal on the bottom. I have repeated for weeks and months now how good precious metals have been to us this year. We got a buy signal on the bottom. We got a sell signal on the top. We got a buy signal that was a little premature, a buy signal that was on a low that didn't last very long, but there was some good profit for a couple of days. We got a buy signal on the bottom. We got a sell signal on the top. Come on. Next chart. Silver. Same story. Oversold, support, very nice rally. Sell almost on top. Sell on the top. Buy on the bottom. Sell on the top. Sell on the top. Whoop, whoop, whoop. Get my cursor here. Sell on the top. Buy on the bottom. Next chart. A buy on the bottom in copper. No, I'm sorry. This is platinum just a couple of days ago. I think it's about to kick in the rally and start to make new highs real soon, maybe today. Buy signal on the bottom, sell signal on that top, buy on the bottom here, sell on the top. And these signals are not just good for short-term trading, scalping and swing trading, but it obviously are good signals for investor types that would be holding on for a significant amount of time Not necessarily 6 months or more, but maybe at least for a few months. Next chart, high-grade copper. Oversold, rallying a little bit, but I got some problems here. I think maybe this could be in trouble, and it could be making some new lows very soon. The next chart is the soybeans are making new lows again. I started at least a week ago talking about the possibility of it going all the way down to 1070. I'm not changing my mind. That's a huge move down. Sell signal almost on the exact high day. Yep, looks like this is really turning into some bearish potentials. Next, bean oil, head and shoulder top formation. Shoulder, a wide head with a double top, which is the head. Sell signal on the second high just before it started to trend lower. Perfect. Now we have a couple of three actually false buy signals. It's kind of strange. You normally don't get three in a row that are bad. So there were a little bit of losses 3 times in a row. But the pattern is working great. I'm looking for 50. Next, meal. Slow but sure, trying to top out here with a very broad head and shoulder again. Sorry, but that's what I see. Downside objective 255-ish. But it has to break out on a closing basis. I need to close below the lows of the last several days. That would do the trick. Next chart, corn. I do think it's on its way down long term, and it's going to end up looking like wheat, the next chart, like that, which I think is going to make new lows again also. Next chart, live cattle. Sell signal on the high day. Sell signal, on the high day. Sell signal on the high day. Sell signal almost on the high day. And again, that's 2 so-sos and 3 great ones. I expect it to test a support at 182. Yeah. Next chart. Hogs bounced off a support, came back up to resistance and stopped. Minor new lows for a couple of days. Looks to me like this is going to challenge that support area again and might even break below 67.7. Yeah. Next, OJ. Well, we finally found out the green tree disease, I believe it's called, is infected the Florida orange crop and the trees, and therefore, sorry about that. Come on, stop that. Sorry about this. Oh, come on. I do not why. Ah, finally, she stopped. That was Ninja Trader. I apologize. OJ, Ninja, I'm sorry, Ninja. A doji, inside trading range. But yesterday, I started talking about an outside up day in overbought conditions being a Bass-Ackwards reversal. We're down today, and we did not make a new high. So is it going to work? It's a very rare, something I've watched happen for decades, kind of a signal. Not quite exactly sure how to handle it, but I spoke up at least. And hey, so far, so, not great. Next chart, cocoa. I'm looking for a potential last shoulder, but all of a sudden we now have a bearish engulfing. So that implies it's going to start to head south. And maybe I'm not going to get that little rally for the next 2 weeks or so into this area. We have a double top. First high, we had a sell signal, ER sell signal red. That was the theoretical shoulder on the left, but it doesn't look like it's going to have a matching shoulder on the right. It looks like it's just going to go down here and break a little support trend line. This line should probably be dropped back to flat as a support line, but it looks like it's going to head south. Next chart is coffee. Same story here. Looking for a little bit lower levels, probably going to challenge the 135 area. And next chart is sugar. Really can't decide very well. Looks like it's having a lot of trouble in this broad area for quite a long time. That could develop into a really big top, and maybe I'll get down in that 20 area I was mentioning quite a while back. Next chart, cotton the rag. new lows for a couple of months now, and that should start a bit of a move, probably down to 76.90 or so. And we're back to the E-mini, which is low and last, but we're not down much. I mean, the spider's down 25 cents. The DIA, 40 cents, big deal. The Qs are still up almost $1. I'm very bullish in the stock market. I've said for a very long time, well over a year, that we will make maybe new historic highs by the end of this year. You have a great day. Talk to you tomorrow.